Good evening,
Yes,
all.
Pranav.
Good evening, all. Welcome to the Professional Development webinar, jointly organized by Southern India Regional Council of Institute of Cost Economics of India, together with Trivandrum chapter and Pondicherry chapter, on the topic anti-money laundering, customer due diligence, and sanction screening process. Today, we have with us Chairman Pondicherry chapter CMA S. Chokalingam sir, Chairman Trivandrum chapter CMA Sharat Nair, and our most beloved Central Council member CMH Padmanabhan sir, our past president Bisharu Basu sir, and also our speaker for the day, CMA Sangeeta ma'am. Before we were starting the program, we can start our program with our institute anthem.
सद्गमय तमसो मा ज्योतिर्गमय मृत्युर्मामृतं गमय मा सद्गमय तमसो मा ज्योतिर्गमय मृत्युर्मामृतं गमय असतो मा सद्गमय तमसो मा ज्योतिर्गमय मृत्युर्मामृतं गमय ॐ शान्ति शान्ति शान्ति.
Next, I'd like to invite Chairman Trivandrum chapter CMA Sharat Nair to deliver his address.
Respected Bisharup sir, beloved Papan sir, Sangeeta ma'am, and my dear Pondicherry chairman Chokalingam sir. Indeed, Trivandrum chapter is privileged and honored in jointly conducting PD program with Southern Region Council and in association with Pondicherry chapter on the topic anti-money laundering, customer due diligence, and sanction screening process. And further, we assure you all that with the support of the Central Council and Regional Council and the fellow chapters, we will be coming up with more professional development initiatives for the benefit of CMA fraternity. Thanking you all.
Thank you, Sharat. Next, I would like to invite our most beloved Central Council member, CMH Padmanabhan sir, to deliver his address. Over to you, sir.
Thank you so much, Pranav Bhai, Honorable Managing Committee Member and Treasurer of Trivandrum chapter. My mother chapter, I should tell. I am very happy. Hearty congratulations to Sharat Nair and the entire team for being the Managing Committee members for the period 2023-27. Also, Chokalingam sir from Pondicherry chapter, the new team who got elected just 2 days back for the period 2023-27. I am very happy that Sangeeta Basu madam has found time to help us on this particular topic. At the same time, I am also very thankful to Vigneshwaran sir. Sangeeta Basu madam will remember, you are the person who connected to the chairman SARC and the entire team of SARC that we can have, and it was originally to happen on Sunday. But for some reason, because we had a lot of Webint and other program, Webint madam means webinar with interactive session. That is why we call Council has given a special name called Webint. So we had a IFRS series, we had India series, we had another program, Kozhikode Malappuram chapter and the Trivandrum chapter together on Saturday. So Chairman SARC and team requested that way round we have it on 13th. Okay, fine. So we are having it today. We are very glad and happy that you have joined us. So nice of you, madam. And you will be very, very happy, madam, that I always tell women are ATM. Being a banker, you may be wondering why Pappan Bhai is telling ATM. Because woman means anytime mother. And any woman at any home, they are the best cost accountants. Maybe I will feel little bit ashamed that I am not a woman, but women are the best cost accountants. Because they know what is profit center, what is cost center, what is productivity center, how to save money and how to utilize it properly, bargaining with X or Y and ensuring the safety of the entire family with good health. Today it is money laundering. See, because money, that is why I am telling. Everything is taken. You are the best person to be the speaker. I am very happy. And one more glad news is that Bisru Basu Dada, the former president of the Institute of Cost Accountants of India, is also with me. That he also felt very happy. That's such a wonderful topic. He is the CEP, that is the CPD person who has to sanction the CEP awards. Our Trivandrum chapter, Pondicherry chapter managing committee members were very polite and humble in telling that subject to sanction. But I am telling you, for any good cause, any good thing for the profession, Bisru Basu Dada is always available to see that members benefit by excellent resource persons like you, Sangeeta Basu madam. We are very happy and very thankful. And madam, you will be very happy. You are Pappan Bhai, the chairman of SAFA, South Asian Federation of Accountants, PAB. And tomorrow, you know, one of our stalls bought CMA Subhashini madam, exclusively for women. That is first SAFA Women Entrepreneurship Program. And the topic of what we have given is business process, mapping and preparation of system, flow charts and methods. Manuals, flow charts and manuals. Tomorrow it is there. It is for the women across the South Asian, that is the 8 countries across our South Asia. Madam is addressing. She is also a great resource person like you, Sangeeta Basu madam. We are very happy. That is, wish you all the best. And because Pranab Bhai, Sharath sir, Sharath Bhai and Chokalingam sir requested me to inaugurate, I thought it will not be proper for Pappan Bhai to inaugurate being the chairman of international affairs or whatever it is. But Bisru Dada, former president, is there. So after his deliberation, he will say one sentence that officially this program is inaugurated. He is the best person to inaugurate. So I request our Pranab Bhai thanking Trivandrum and Pondicherry chapter, and in particular Chairman Southern India Regional Council and the entire Regional Council members of SARC also for ensuring that be it election or let it not be election, but members and students are eligible to enrich, and nothing wrong in conducting programs. Only thing is we should not give any unnecessary publicity with the names or whatever it is who are eligible to contest, right? So thanking the Southern India Regional Council team, thanking Trivandrum chapter, thanking my own Pondicherry chapter, I hand it over to Pranab Bhai, who can now request our Bisru Dada to say a few words as well as inaugurate. Small deviation, Pranab Bhai, don't mistake me, because Bisru Basu sir is our former president. When he is there, he should inaugurate. I am part of Trivandrum Managing Committee, so I am requesting you.
Okay, sir. Thank you, sir.
And I wish all the participants the very best. Good news are going to come. And today you have received the notification that we should not use ICAI, whereas we can use ICMAI. Handing over to Pranav Bhai, and he will welcome our Bisru Dada.
Okay, sir.
Sangeeta madam, thank you so much for being with us. We will be listening to you very carefully to learn more things from you, madam. Let this be a beginning, madam. You should come again and again and help our institute and our members and the student fraternity, the generation next to know more things from you, madam. Okay.
Thank you, sir.
Thank you.
Thank you.
All the
Thank
best.
you, sir. Okay. As the Padmanabhans are told, we are continuously conducting our professional development initiative for the benefit of the members. But fortunately, this time, our regional council, Southern India Regional Council, and our Pondicherry fellow chapter has joined us in this initiative. And as Papan sir mentioned earlier, last week also we have conducted our joint program with our most vibrant Kozhikode Malappuram chapter, and indeed it's in line with our India's presidency in G20. Like it has a three motto, like one earth, one family, one future, and we emphasis on the one family, and we consider all our fellow chapters as one single family, and together we will organize more program. And which much privilege, I would like to invite our Vishnu Basu sir, past president of the Institute of Cost Accountants of India, to say a few words and kindly inaugurate the function.
Yes.
Over to you, sir.
Yes, a very good evening to all of you, respected members of Pondicherry chapter and Trivandrum chapter. And I also congratulate SIRC for taking up the topic anti-money laundering. Knowledge is power, knowledge is strength, knowledge is summation of creativity plus courage plus righteousness. I also appreciate the hard work done by H. Padmanabhan in organizing H. Padmanabhan, our former Vice President of the Institute of Cost Accountants of India, and office bearers of Trivandrum chapter and Pondicherry chapter. And I also congratulate and heartily welcome today's speaker Sangeeta Basu. Sangeeta Basu, I hope the deliberations in the seminar will go a long way. The basic purpose of today's seminar is dissemination of knowledge. I appreciate the hard work done by Trivandrum chapter and Pondicherry chapter and also SIRC. I would request to continue with such good work done by Pranav Bhai and also the chairman of Pondicherry chapter, Mr. Chokalingam, and Madam Sangeeta Basu and Sharat Nair of Trivandrum chapter. Okay, we wish you all the best. Thank you very much. I declare today's program as inaugurated. Thank you very much. Please continue.
Next, I would like to invite our speaker for the day, CMA Sangeeta Basu ma'am, to kindly enrich our members with the wonderful topic anti-money laundering, customer due diligence and sanctions screening process. Over to you, ma'am.
Thank you very much. I would like to thank all of you, especially Mr. Padmanabhan, Mr. Sharat Nair, Mr. Chokalingam, Mr. Pranav Jain, and last but not the least, Mr. Vignesh. Thank you very much for making this event happening. And also, I would like to thank the newly qualified CMA, Mr. Mukunda Hande, who actually assisted me in preparing the deck for today's program. Well, so let's start the process. Welcome all of us accountant, and let's see how we can make this session interesting. Well, I'm minimizing it. Okay, so welcome to the session of anti-money laundering, customer due diligence, and sanctions screening. Before I jumpstart with the deck, let me tell you why we have chosen this particular segment of anti-money laundering program. Customer due diligence is exactly a very important part of anti-money laundering program of any institution. This is the part of AML program which actually help an organization to identify who the people they are dealing with, what kind of customers they are, from where they are coming from, and whether they have really any threat to the organization. Although this program is tilted a little bit towards banking and financial institutions, but it is equally applicable for designated non-financial business and professions. As we know that nowadays, especially the rules and regulations related to anti-money laundering is becoming more stringent. And now the central bank of every country which are under FATF, even not under FATF, are creating a lot of pressure on them to implement a robust anti-money laundering compliance program. This program is suitable not only for the banking professionals, maybe we have some fellow cost accountants who are coming from banking industry, also for people who are in the finance sector, insurance sector, and mostly it will be applicable to cost accountants like us who are a little bit into the practice, because now DNFPPs are actually in the need of anti-money laundering compliance. So here in this program, first we will talk about customer due diligence, what are an effective customer due diligence program is, what are the high risk customers, low risk customers, medium risk customers, what are the different risk categorization, because I will touch a risk-based approach a little bit, and also we will finish with sanction screening basics. So let's start. Well, customer due diligence is needed in order to identify who the people we are working with, who are our customers, from where they are coming from, and what kind of business they are looking for from us. Now, this customer due diligence program varies from organization to organization. It depends on the type of organization, the complexity of the business, the products and services offered by the organizations, and also the type and kind of customer base. FATF has categorically mentioned or categorically given some recommendations related to customer due diligence. First is that an organization must identify who their customer are before onboarding a customer and verify their identity using a reliable and independent source document and data. This is very important because before we onboard a customer or before we establish a relationship with them, we must know who they are. And just taking their passport or taking their ID is not enough. We must verify from an independent source that the documents which are provided by the customer are correct and they are not forged documents. Then we must identify who the beneficial owners and try to identify with all reasonable means that the ultimate beneficial owner when it comes to an account or for a particular transaction. Also, we need to understand purpose and intended nature of this business relationship. It is not for the banks, even as a practicing cost accountant, or if we are engaged in certain kind of business relationships or we are offering certain kind of products, we need to know that what is the purpose for which the customer is coming to us, what kind of services they are expecting, and whether there is any threat for us for onboarding a customer or offering such kind of services. After establishing the business relationship with the customer, we must monitor them on a regular basis, especially those customers who are considered as high risk customers. Later on, we will explain who are the high-risk customers. As per FATF recommendations, there are certain characteristics or elements a customer due diligence program must have. First is, before you establish a customer due diligence program, you must follow a risk-based approach, because especially for bankers, we know that there are 100,000 customers are coming every day asking for certain banking facilities. It is not possible to independently verify each and every customers. So our focus should be on those customers who are posing much greater risk for us. The second element is that you must, as a banker or a financial institutions or professionals who are onboarding customers, must have a proper data collection. You must take all the data required in order to onboard a customer and also to continue a business relationship with them. A full customer due diligence must be performed before taking in any new customers. You apply a simplified due diligence process when you see the customer is posing a low risk. But when it comes to high risk customer, a complete due diligence process must be made before onboarding a customers. Also verify who the customers are, their identity through a reliable and independent procedures. Nowadays, every country or most of the government, they have a e-governance facility through which a financial institutions or a bankers can easily identify or match the document which is given by the customers and the documents which are stored in the government's record. If all these elements, if we cannot satisfy, it is better to cancel the relationship, or better not to onboard a customer if you feel that any of these processes cannot be satisfied, because sometimes some customers really pose greater risk for us. And if you look at the records of the banking failure, you can see that many banks' failures are associated with poor anti-money laundering program. So in order to onboard a customer, we have to make sure that we are onboarding the right kind of customer or right kind of company. Now the question is, now we know that what are the FATF recommendations and what are the elements we should have in order to onboard a customer. The question is, okay, before I proceed further, can you see the screen, please? Any one of you can respond?
Madam, the presentation is not visible, madam.
It is visible, right? There
No,
is no issue.
no, madam, it's not visible.
Okay, let me. Can you just check why it is not visible? Just give me a moment.
Okay, ma'am.
Can you check that why it is not visible? In anyway, I didn't proceed further. Maybe I can quickly. I can. Okay, now put it in the slideshow, please. Can you tell me if it is visible now?
Yeah, ma'am. Now it's okay. Fine.
Okay, can you check whether it is moving? It is moving?
Yeah, fine.
Fantastic. I think now it is working. Okay. As I discussed before, that there are FATF recommendations 10 which clearly state that before onboarding a customer, what are the things we should do? First is identify the customer and verify their identities through an independent source. Second is identify the beneficial owner or ultimate beneficiary of a particular account or a particular transaction. Third is understanding and take an appropriate information on the purpose and intended nature of the transactions. And the last but not the least, conduct an ongoing due diligence once you onboard a customer. Yes. Just give me a moment. Yeah. Now it is visible, right? So let me. Okay. As I discussed before, that FATF has recommended certain elements which must be there in customer due diligence, like adopt a risk-based approach. As I said before, that for the banks, as they're onboarding on maybe 100,000 customers a day, it is not possible to focus attention on each and every customer. So better to focus attention on those customers who are posing higher risk for us. The second is all the documents related to a customer must be obtained before onboarding a customer. The entity should apply a complete due diligence process before onboarding a customer, whether it is an individual or whether it is a corporate customer. When it comes to a lower risk client or a lower risk customer, apply a simplified due diligence process. But when it comes to higher risk customers or clients, a little more effort is required to identify and verify who the customers are. The documents provided by the customers must be verified independently through e-government services. Now, most of the countries we have this kind of facility where directly we can match the documents provided by the customers with the documents which are stored in government's record. If all these conditions 1, 2, 3, 4, 5 cannot be satisfied, it is better not to create or establish relationship with the customer, though this is little different from de-risking activity, which we will talk about later. Now the question is how to establish a good customer due diligence process. For bankers, already they have a robust due diligence process because they use artificial intelligence and robotic process automation. But the problem really comes when it comes to designated non-financial business and professions, because as a DNFBP, we don't have a robust system like bankers or big financial institutions. But as per the FATF requirement, and nowadays, most of the regulators are asking or pressurizing DNFBPs to establish a sound customer due diligence process and procedure. So at minimum, as a DNFBP, what we can do? So a customer due diligence program consists of several elements which must be complied with before we say that, yeah, our due diligence program is sound and proved. Okay, so let us start. What are the different elements? The first is you must have a process for customer identification. How you can identify? You can identify through your know your client or know your customer form. The second is once you get all the identification information about a customer, create or develop a profile of the customer. This profile will tell you what kind of risk this customer will pose, and in future whether this customer will become a troublemaker for your organization or no. Once you establish the customer profile along with their risk rating, you decide whether you will accept this customer or whether you will reject the customer. Because some customers are too risky for us to accept, which we will discuss later. Then create a risk rating for the customers. The customers are rated as high, medium, and low risk. This is the most simplified way, but bankers and big financial institutions, they have again their sub ratings. So the prime three ratings are high, risk, and low. Now, once we establish the customer profile, after we accept the customer and when we assign the risk rating, the next step for us is to monitor the customers. Now the question is, which kind of customer I'm going to monitor? Maybe as a DNFBP, you can say, see, I have only one MLRO and I have 1,000 clients whom I will monitor. And when it comes to bankers, maybe some 100,000 clients are there, they're onboarding every day, and maybe some 500,000 customers are already in business with them. The question of monitoring comes for those customers who are posing or who are creating high risk for us. Now the question is how I can assess whether a customer is a high risk, medium risk, and low risk when I'm onboarding a customer. Here, keep it in mind, when we onboard a customer, we cannot assess whether the customer is a terrorist or whether a customer is a money launderer. The onboarding process gives us some information that what is the nature of the customer and what is the expected activities they are going to perform. But the real nature of the customer or client get unfold when they start transacting. Terrorist financiers will never start anything or create any suspicion when they are onboarded. But when they start transacting, the real red flags will start coming. And for that reason, you need a robust transaction monitoring system. The transaction monitoring system will tell you the kind of customer, their behavioral pattern, their transaction pattern, and where the suspicions are lying. So monitoring is essential for all kinds of customers, but especially for the high risk customers and clients. We have a kind of a wrong notion that when we onboard a customer and when we give them a high risk rating, that means he will always remain as a high risk customer or client. This is not the case. When a customer starts transacting, then only the real intention of the customer gets unfolded. Let me give you an example. Let's say a student account. Normally, student account is a small amount account, and in banks, they are considered as a very low risk account, or they are grouped under CASA, that is current account, saving account. They are not a threat factor for a banker. But if you see that after onboarding a student, he is receiving many international wire transfers into its account, he will no longer remain a low risk account because it is very unusual for a student account to accept international transfer or international transaction or foreign currency in its account. So this becomes a red flag. So you can see a low risk student account can become a high risk account when the students start transacting. Similarly, another example I am giving you, for example, the salary account. In salary account is considered also as a low risk account, or it comes under CASA. In salary account, the typical characteristic of it is in the credit side, you see the salary transfer. But in the debit side, you see a lot of expenses which comes from like cash withdrawal, POS transaction, and also like buying products or services through debit card. But normally, salary account is considered, as I said, a low risk account. But if you see that in salary account, lot of credit transactions are happening, but very less debit or expense transaction, definitely this will create a red flag, because salary account normally will have a very less credit transaction and many more debit transactions. So in that case, a low risk account will become a high risk account, and you have to start monitoring such account. Now, the next part of customer due diligence program is investigation. When you see a situation like this, a student account all of a sudden started getting a lot of international wire transfer, you must create a red flag and start investigation where this money is coming from, whether this student is a money mule, maybe behind them some terrorist organization, some drug traffickers are working, because many student accounts or many students work as a money mule for drug lords or for money launderers or for criminals. So do a proper investigation, or there must be and proper investigation procedure should be there in the organization. If required, escalate this investigation to the FIU in the form of suspicious transaction report. Last but not the least, a sound customer due diligence program must have documentation process. The documentation is not just for your internal purpose or to meet the regulatory requirement. The documentation is also required if there is any inquiry comes from any external agencies, or suppose if you are escalating a particular case to a financial intelligence unit. So these are the key elements of a sound customer due diligence program, and this is applicable irrespective of the organization, whether you are a banker, whether you are an insurance company, or whether you are a DNFBP. As I said, the first element of the customer due diligence program is KYC, or know your customer. As all of us, we have banking relationship with our bankers, and we know what this KYC is talking all about. We must keep in mind that KYC is not just a document or a form to fill. It has a lot of information, and this KYC form will actually assist you to create a complete profile of your customer or your client if you are a DNFBP. Sometimes we have a notion that, okay, KYC form are a lot of boxes, just we fill it and that's all. Our work is done. Especially, I'm talking about the people who are responsible for onboarding process, because the information which is given in the KYC form or acquired through the KYC form can give you a lot of red flags about the client or about the customer. For example, let us start with one part, which is personal information document. So before onboarding a client or a customer, you need some identification in the form of national identification card for nationals, and for expatriates or foreigners, their passport, work permit for non-nationals. This identification procedure or personal information documents also depends on the country's rules and regulations. Now, as I said before, that this KYC form is very important, because this form will show what kind of person you are dealing with. Let's say, for example, passport. When you are onboarding a customer, okay, you are asking for the his passport or her passport. You have to ask whether the person is holding another country's passport. Why this is important? I am giving you my life experience. I was doing audit or AML compliance review for one exchange company. And I have seen a kind of peculiarity that many transactions with Americans got rejected. I said, see, Americans are not high risk jurisdictions or not the sanctioned jurisdictions. Why you are rejecting their transactions, especially those Americans who came to the exchange house to buy or sell foreign currency? The MLRO told me that, see, what happened here? These Americans, they have another country's passport, and by investigation, we find out that most of them, they have Iranian passports. Iran is a sanctioned jurisdiction, and the nationals of Iran are prohibited to buy or sell US dollars. So when these customers came with American passport, they knew that they might be asked that whether they are holding any other country's passport. And through the sanction screening process, the exchange identified that they are holding another passport that is of Iran, and they rejected the transactions. So you can see that passport or this kind of information is so important when you are filling KYC form. So if you are a banker or if you are a DNFBP, if you have a customer with one country's passport, please ask them whether they have any other country's passport or not. The second most important information is address of your client or your customer. Definitely it will come to your mind what terrorist financing or money laundering has to do with address. This address information is very important. The reason is that if you see that many customers, they're unrelated to each other, but they're giving one single address or they're just giving a post box number, then definitely there is a red flag. In 9/11 attack, 21 hijackers, they opened bank account by giving same address. So when you see that many customers coming to you to open the account or to open a business relationship, and all of them or most of them are providing same address, it is a clear indication of terrorist financing or terrorism. So you have to be extremely careful of such kind of customers, especially when verifying the address of the customers. So when you are doing sanction screening, not only you will screen the person's name, also the address. The third is the proof of work for individual. If a person is a salaried employee and if he's coming to you to a bank to open an account, you must take the proof of work in the form of their salary certificate or their employment letter. This information is very important for a banker. The reason being that after onboarding a person as a salaried employee, after a few months, you see that normally what happened that when a salaried employee is opening an account to you to your bank, every month salary gets transferred to the account, and this is a normal situation and there is no risk in it. And as you know that more than the employment letter, if the salary gets transferred to the person's account, then it is a clear indication that it is a low risk account. But the question is, all of a sudden, if you see that salary is not getting transferred, but every month similar amount of cash is deposited in the person's account. In that case, you have to start investigating, because this can be a case of terrorism, or maybe the person is engaged in some kind of terrorist activities. So you can see that a low risk salary account can become a high risk account if all of a sudden the salary stopped getting transferred to its account. Fourth is authorized signatory. You must know who is controlling the account, although signatories are not same as the beneficial owners of the organization. And if you are not satisfied with all the information which is required for a KYC for an individual, start asking queries, because asking for additional information doesn't mean tipping off. So if these informations, as I have given here, maybe this is just a basic one. For many bankers, maybe they have other requirement. Look at your internal policy of your company. If you are not satisfied, ask question before onboarding a customer. Now when it comes to customer due diligence for entities, the complexity is more, because you are dealing with a legal person, and also you are dealing with people who are actually running the organization. So what are the requirements for onboarding a legal person or a legal entity? As we know, the legal entities are varied. It can be a sole proprietorship business, it can be a partnership business, and it can be a company, it can be a multinational company. Now the question is, what kind of information we must collect before we onboard a legal person or a legal entity? The first and foremost, registration certificate. Collect the registration certificate, collect the license, look at the tax identification number, look at that who are the owners of the company, collect documents about authorized signatory, and also the owners of the company, collect the information about them, the ultimate beneficiaries of the companies, and also collect memorandum and articles of association of the company. Collecting this information is not enough. You have to independently verify whether this information is real or they are forged. Company identity or the registration certificate nowadays can be easily verified through e-governance services. Many governments, as we said before, that they have a database of individuals and of companies. When you before onboarding a legal organization, you have to screen who are the owners of the company, take their information and put it in your sanction screening system to check whether they are sanctioned individuals or not. Also verify the identity of the authorized signatory of the organization, and if required, do a sanction screening for the authorized signatories. If you are dealing with a foreign company, the procedure is more complex and more lengthy. You have to take certified copies of all the documents, as I've mentioned, from the foreign entity and also from the embassy of that entity or that country. You have to get it stamped from the embassy of that country, that foreign country, of your embassy, your country's embassy. And you have to also independently verify who are the parents of that country, where they are located and where the branches are located. So you can see the process is more complicated when it comes to legal entities, as legal entities varies considerably and the customer due diligence procedures become more complicated. Now the next kind of customers you might be dealing with are charities and non-profit organizations. I believe mostly bankers, they have this kind of clients. Even some DNFBPs, they're working for charities and non-profit organizations as an accountant or giving them some financial advisory services. Now the question is, what are the requirements for onboarding a charity and non-profit organization? As we know that charities and non-profit organizations are considered as high-risk clients because they are prone to terrorist financing or money laundering. Many terrorists, they open charities or they work behind the charity. So that is the reason whether FATF or different governmental organizations or regulators, they have considered charity as a high risk client. So before onboarding a charity, you must obtain certain documents and you must assimilate certain information. What are this information? Certificate of registration of the charity or NPOs or the license to operate. If the charity doesn't have any certificate of registration or license, it is better not to onboard such kind of organization. Maybe this kind of charities are run by terrorist or terrorist organization. The letter from the charity must come requesting to open an account. Take the authorized signatories of the IDs of the authorized signatories of the charity. Take the authorized documents or the identity documents of all the office bearers of charities or who are the owners of the charities. Also check the location of the charity, and before accepting a charity as a client, you must take approval of your money laundering reporting officer. If a charity is already established, you must take their accounting information. Most of the charities now have to audit their financials. Take their audited financial statement. Look at whether the charity has a valid charitable program and budgets. Also, look at the income and expenditure pattern of the charity, the source of the donations of the charity. If the charity is receiving a lot of foreign donations, look at the countries from where they are receiving the donations, whether the regulators of your country require any particular license or particular investigation procedures before accepting the donations or before the donation gets credited to the charity's account. Also look at the spending pattern of the charities. This is very important. If you see that the charity is withdrawing a lot of money through the ATM, you must start investigation. Also, if you see that the charity is making a lot of wire transfer, especially sending cash to distressed area, especially to those jurisdictions which are suffering from terrorist activities, you must start investigation. Before you onboard a charity, you can put certain restrictions that the charity's withdrawal of cash should be limited. And when a charity is sending any donations to any other country, especially those countries which are considered as high-risk countries, they must send the donation in form of goods or medical aids instead of cash, because the cash can be used for terrorist activities. And it happened in many cases, especially in the Jordan and that particular area. There is a organization called Nasrallah Front. They are engaged in terrorist activities and they use many charities to raise fund. They are keeping charity as a front but behind the charitable activities, actually, they were organizing different terrorist activities, and also they were spreading their agenda through charity. So when you are dealing with a charity, you have to be extra cautious because charities can be easily manipulated by terrorists and terrorist organization. One thing you keep it in mind, if a charity is buying goods which are dual use goods, means the particular kind of good which can be used for a normal activity, even which can be used for making nuclear bomb, you must stop such kind of transactions. So before onboarding a charity, you must look at their income side, especially the donation side, and also their expenditure side, especially what kind of items they are buying. If it is unrelated to a charity, better you should make investigation, and if needed, escalate this investigation to the FIU in form of STR or suspicious transaction report. As I said before, once you accept all the information from the charity, it must be verified independently through e-governance services. Now, a kind of a dilemma we face when we are onboarding a customer or a client which is, or a company which is under registration. The problem of this kind of clients are that you don't have a company registration certificate or CS certificate, you don't have the license, even all the documents are in the draft format. Now the question is, am I going to onboard this kind of clients or this kind of customers? Many of us, like practicing cost accountant or chartered accountant, we assist our client to form the company, or we assist them in the company formation process. Now, the first question will come, what kind of information I should collect before I onboard a legal person or a company which is just under formation or under registration? In that case, the expert advice say that obtain a draft memorandum of association to check what kind of activities the company will be engaged, even if it is not finalized by the relevant ministry. The second is prepare a special KYC, because this is a unique case. Because many of the information which is required in the KYC form will not be available. So it is suggested that prepare a special KYC form for such kind of client. You must identify the owners of the company and the shareholder of the company and do an appropriate sanction screening to check whether this kind of customers or the owners are sanctioned individuals. Check the company's objectives. I've seen a case. There is a non-profit organization, they are under formation. The not-profit organization's business is to trade in fruit juice. The first question came to my mind, what a non-profit organization has to do with juice business? Because the non-profit organizations are formed for certain purpose or for certain cause. So when we start drilling down, we saw that the company's objective is not clear. Even owners, they don't know what they are going to do. Just in the form they have written that our business will be juice trading. It shows that this kind of company can act as a shell company. If the purpose of the company, purpose of their business is not clear, maybe this kind of company can be used by money launderers or criminals as a shell or shelf companies. Also, you must check the type of transactions, expected amount in the account, because if you know that what kind of business you are going to do, you can clearly state what kind of transactions you are going to incur. So as a relationship manager or as a DNFBP, if you are onboarding a client or a customer who are under registration, you must follow this step. And if required, please do a sanction screening to check whether the people who are behind this organization are sanctioned individuals or not. Now, another area we need to emphasize, because now most of the regulators are putting pressures on whether you are a banking organization or whether a DNFBP to identify the real beneficiary of the account or real beneficiary of the transaction or the real beneficiary of the ultimate beneficiary of the company. Because many criminals, they don't come in front. They use either money mules or they use straw companies or they use shelf organization or shell companies to conduct their dirty activities. So it is very important to identify who are behind the organization and what kind of influence or holdings they have in the organization. So as a due diligence process, you must identify the real beneficiary. It can be identified through the KYC document. In the KYC document, in many organizations, there is a one line which clearly states that whether you are ultimate beneficiary or no. If the answer is no, start drilling who is the ultimate beneficiary. Once you understand who is the ultimate beneficiary, you must collect the documents for the ultimate beneficiary. That means their identity documents, their address, and also, if possible, their source of income, and do a appropriate sanction screening for real beneficiary. Sometimes it happens that real beneficiary is a sanctioned individual. He cannot come and open the account. He used a straw man or a money mule to open the account and to conduct business for them. One thing you keep it in mind, especially for minor accounts. Minor accounts are considered as a low risk account. Normally, minor accounts have very low balance, but minor accounts need to be verified very well, because many sanctioned individuals, they use their children's account to operate. So when you are dealing with minors account, check the parents, who are the parents, and do a sanction screening for them. And for any, whether you are dealing with a legal organization or whether you are dealing with an individual, check who is the ultimate beneficiary, who ultimately control the organization. One thing we must keep it in mind, that signatory of an account doesn't mean that he is an ultimate beneficiary. Maybe somebody is acting behind that signature. So when it comes to individual or when it comes to a legal organization, you must identify who is the ultimate beneficiary or ultimate beneficial owner of the organization. Also, you check the transactions, what kind of transactions or services the company is looking for, especially the ultimate beneficiary. So now we will go to a kind of statistics on who will be considered as ultimate beneficiary. So as per the European Union, any individual who holds more than 25% of an organization is considered as ultimate beneficiary. Although the definition differs a little bit or wordings differs a little bit, but in most cases, any individual in any organization, if he holds more than 25% of the company or has substantial influence over the company, which amount to 25% and more, should be considered as ultimate beneficiary. Before you decide about ultimate beneficiary, look at your country's regulations, because many countries they have 10% or more. If a person is holding 10% or more, they are considered as ultimate beneficiary. So look at your country's regulations and your country's requirement related to identification of ultimate beneficiary. Now we will do a case discussion. I think you're getting the slide. Okay. As we said that in case of an individual, through their KYC form, they declared whether they're ultimate beneficiary or not. In case of legal organization, suppose if it is a company, the registration certificate or the company incorporation certificate, from there you can identify whether a person or whether how many ultimate beneficiaries are there, or how many persons who are holding more than 25% of the company or more than 10% as per the regulations of the company. This is a very straightforward process. Now, if you encounter a complicated organization structure where many natural persons and many legal persons are holders of the company, now the question will come, how I will identify ultimate beneficiary, especially if you see in the screen, does this kind of organization structure. Always keep it in mind, the ultimate beneficiary is always a natural person. Even if we hide behind the legal entity, ultimate beneficiary is always a real person or natural person. Now let's drill down this kind of complicated organization structure. Suppose your prospective client is bringing an organization structure like this. Of course, this kind of structure will give you a great headache. So here, the applicant for the account is company A. You can see that company A is held by one natural person, which is Mr. Mark, and another legal entity, which is company B, and the company B is holding 70%. Here, one point is that we can straight identify Mark as an ultimate beneficiary because he is holding more than 25%, 30%. Now, what about the local company B? The local company B, you can see it is held by one foreign company, that is company C, and another natural person named Harry. The natural person is holding 60% and the foreign company is holding 40%. Now, if you further go down, you can see that foreign company C is held by one company and 4 natural person. Now the question is how far I can drill down. Let us do a small mathematics. Let's see. For Mark, we have already identified that he is an ultimate beneficiary. Now the problem comes with local company C because 40% is held by a foreign company and 60% is held by Harry. So if you multiply the 70% into 60% holding of Harry, he becomes ultimate beneficiary because he is ultimately holding 42% of the company A. So we can easily identify Harry as one of the ultimate beneficiary because his holding is more than 25%. Now, what about the foreign company C? Question will come, shall I drill down further? Here, the answer is you will drill down till you identify a natural person who is holding more than 25% of company A. If you do the calculation, you can see in the last layer, D and 4 foreign persons, all of their holding, I think 5.6% of company A. So all these people and company D are not the ultimate beneficiary. So the final outcome of this slide is that keep drilling till you identify an ultimate beneficiary who is holding more than 25% of the shares, 25% and more of company A. When you identify these ultimate beneficiaries, you have to collect their identification information, which consists of their passport, their address proof, and also their source of fund. And never forget to do a sanction screening to check whether all these people who are holding 25% and more of company A are sanctioned individuals or not. When you see this kind of complicated organization structure, be extra cautious, because money launderers or criminals, they create this kind of complicated structure in order to obscure the source of fund and obscure the information about ultimate beneficiaries. For ultimate beneficiaries, you can create a separate form that is also advisable to check who are the ultimate beneficiaries, what kind of relationship they have, if it is an individual account holder with the account holder or with the company, what are their nationalities, what is their country of residence, what kind of work they are doing, their address, their telephone number, their source of income, their home address, and whether they are sanctioned individuals or not. Because this information will be very helpful for you in the future when this kind of organization will start transacting. Here the real intention or here real intent of the ultimate beneficiary will come out. So it is advisable allowed to create an ultimate beneficiary or real beneficiary form along with the KYC information or KYC form. Now you can see a kind of a template of KYC form, especially those who are practicing cost accountant or who are company formation agent. If you don't have a appropriate KYC form, maybe you can select from any of the forms. I have just given a basic form. There are many forms available. Maybe you can check with the Wolfsburg group, and also many independent sites are there from you can collect appropriate KYC form. So normally a basic KYC form looks like this. I'm not going into detail into it. Okay. Now, so far, we have discussed why the CDD is needed, what are the information you must collect, and what are the information you collect when it comes to an individual, when it comes to a legal entity or a corporate, when it comes to a charity and non-profit organization. Also, you must identify ultimate beneficiaries and do sanction screening for all the owners or holders of account to check whether they are sanctioned individuals or not. Now, as we said before, all customers doesn't pose same kind of risk. There are certain customers or certain clients who are considered very risky for us. When it comes to risky clients, we have to do certain additional procedures, which is called enhanced due diligence. So who are these customers or clients for which we must do an enhanced due diligence? They are political associations or politically exposed persons, NPOs and charities, DNF, BPs. This also include practicing chartered accountant, cost accountants, or practicing company secretaries. We are considered as a high risk client when it comes to bankers or financial institutions. Travel agencies, car dealers, high value products dealers, Money exchange companies, they're always considered as high risk because many terrorists, they use money exchanges to transfer funds. Especially they use a lot of underground bankers and also hawala exchange houses. So for that reason, money exchanges are considered as high risk customers or high risk business. Cash intensive business, especially shopping malls, provision shops, petrol bunkers, because money launderers will always look for businesses which are cash intensive so they can mingle the real business money with dirty money. So all cash intensive businesses are considered as high risk client. Gold dealers, high value products and real estate agents, they are also considered as very high risk and enhanced due diligence must be performed for them. Casinos, I think from the beginning of the history of casinos, they are always considered as high risk. So any casinos or gaming industry are considered as high risk business and an enhanced due diligence must be conducted for them. Also, last but not the least, weapons, military departments, and especially companies who are dealing with dual use equipment must be considered as high risk business. I will share a story with you. I was doing a feasibility study for a company. The company is a manufacturer of dentures. So when we completed the feasibility study, we sent the study with the machinery list to the bank so that the client can get banking facility. The bank called us and they said, can you come to our branch because we need to discuss some issues. We were really surprised that a basic denture equipment manufacturers, what kind of risk they can have. When we went there, the bankers, they were sitting with us, they opened the machinery list and they identified 2 machineries which are used as a dual used equipment. That means that machineries can be used to manufacture dentures and the same machineries can be used to create nuclear bombs. So the banker said, hey, you cannot keep these 2 machineries. If you keep these 2 machineries, we are not going to finance you. You have to remove these machineries because they are dual use equipment and we are not permitted to finance any organization who are using dual use equipment. So we had to remove these 2 machineries from the machinery list. So if you see any organization who are manufacturing or trading in dual use equipment, you must consider them as a high risk to check whether they are making those equipments or buying those equipments in order to manufacture weapons of mass destruction, especially nuclear weapons, chemical weapons, and biological weapons. So this kind of organization are considered as very high risk and you must do an additional due diligence for them. Now we will come to a kind of or a group of people who are considered as a high risk and they are known as politically exposed persons. So who are these politically exposed persons? FATF has defined or identified or grouped politically exposed person into 5 categories. One is foreign PEPs, second is domestic PEP, third is international PEPs, then PEPs family members and close known associates of PEPs. So foreign PEPs are individuals who are holding prominent position in a foreign country. So what are these prominent positions? They can be the prime minister of the president of the country, they can be cabinet ministers, they can be judge of a Supreme Court, judge of a High Court, they can be very senior military officials, or they can be a senior persons in a senior position of a state-owned corporations. And also they can be diplomat or embassy or embassy senior officials of the embassy. When it comes to domestic PEP, they consist of ministers in the country or in the home country, and same definition goes what is applicable for foreign PEPs, like they can be the president of the country, prime minister, cabinet minister, even opposition party, the senior leaders of the opposition party. They can be judges of Supreme Court, High Court, and also they can be senior officials of state-owned corporation. When it comes to international PEPs, the persons or positions are senior officials or supranational bodies like IMF, World Bank, UNDC or similar kind of organization. The PEPs are not the individuals, their family members are also considered as PEP. Who are these family members? First degree relatives of politically exposed persons. PEP's close associates are also considered as PEP. Now the question is that why we must consider PEP as a high-risk customers? Are all PEPs are bad? Having a PEP client is not bad for the organization. PEPs are considered at high risk because they have access to huge fund. So that fund can be used for manipulation or for bribery or for money laundering. Because they have access to huge fund, that is the reason PEPs are considered as high risk client or high risk customers. I will tell you a very funny story. We were doing audit of an exchange company in Qatar. The first time when we visited, we saw only four PEPs. They have identified 4 PEPs, and as PEPs are considered as a high risk, they said that we have screened all these PEPs, and okay, their accounts are clear, and we asked for all the documents of the PEPs to check whether enhanced due diligence is performed for these PEPs or not. I was a little worried because such a big exchange house and only they have identified 4 PEPs. I was telling my assistant, maybe they were not doing PEP screening properly. So we concluded our audit and we submitted our report, and we gave a kind of a suggestion that you have to strengthen your PEP screening procedure. Next year when we went back, we asked same for the PEP list, that how many PEPs you have this year, and they gave a list of 450, from 4 to 450, a very big jump. So we were really confused that in a 1 year, why such a huge increase in the number of PEP customers? So I asked that why such a big number? The MLR was very happy. He was telling, Madam, don't worry, I will give you all the information. This time we made a stringent screening of the PEPs, and that is the reason you can see such a huge number of PEPs this year. I was worried that whether some notorious political persons are using this exchange by seeing that they have a little flexible anti-money laundering policy or the KYC requirement. I said, okay, bring your PEP list. And when they brought the PEP list, I asked my assistant to start looking at the list. What I saw, there were few like CEO of 1 or 2 state-owned corporations are there. 1 or 2 judges were there. But most of the PEPs were coming from 3 particular embassies. And who are these PEPs? The ambassador, the first visa officer, the secretary, the office assistant, the gardening person, cook, janitor, everybody, every single person from the embassy, they put under the PEP. So we started laughing that what this janitor has to do with PEP transaction, because PEPs are normally considered as senior officials. Why did you put janitors, office boys, secretary, gardeners as a PEP? They said that, see, the high officials will not come to us with a sack full of money to do transaction. Rather, they will send this kind of people to transact on behalf of them. For that reason, as per the regulation of the state, we included every single one from the embassy as politically exposed person, and we did enhanced due diligence for all of them. So the ultimate point is that FATF has given a definition of PEP, but you must look at your country's regulation about the PEP definition, that who are considered as a PEP and who are not considered as PEP. So as I discussed before, PEPs are classified into three categories. Foreign PEPs, like individuals who are or have been entrusted with prominent public function by a foreign country. Domestic PEPs are individuals who are or have been entrusted domestically with prominent public functions, and international PEPs like senior officials or supranational bodies like IMF, World Bank, etc. Now, before you identify a person as a PEP, what are the approach you have or you must have in your customer due diligence process? First is, you can identify a PEP through the KYC form, because there is a separate section in a KYC form where it is clearly mentioned that whether you are a PEP or not. If a person tick there, that means he is a PEP. So customer due diligence form or the KYC form give a lot of information whether a person is a PEP or not. The second approach is you screen the customer as a PEP screening, because every sanction screening tools or procedures have also a section for PEP screening. Screen the person's name to check whether the person is a PEP or not. Although FATF recommend analysis, detailed analysis of KYC information to identify the PEP, but also you can take assistance of sanction or PEP screening system to identify or screen whether the person is a PEP or not. So before you identify the PEP, also you check the identity, the passport copy, and also from where these PEPs are coming from. As per FATF, all foreign PEPs are considered as high-risk client. When it comes to domestic PEP, FATF is little silent about that, but when it comes to PEP, you must do enhanced due diligence. That means you must identify the identity of the PEPs, their source of income, and also the ultimate beneficiary of the PEPs account. Every country, they publish two kind of lists for politically exposed person. A list which clearly mention the positions and functions. If you must refer to the list that whether what kind of functions or what kind of positions are considered as PEP. Also, many countries, they publish another list which actually give information of the actual names of the PEPs. So whatever list you have, you must refer to your country's list to check whether a particular position is considered as a PEP or not. As you can see, the two kind of lists which are used for PEP screening or to identify a particular person or a particular position is a PEP position or not. Now, as we have discussed before, that there are certain clients or certain customers or certain kind of business which are considered as a high risk business for which we must conduct enhanced due diligence. So what kind of business? Let us do a little bit detailed analysis. The client who is a non-resident, always non-resident customers or a non-resident company or a company which has a different country's flag must be considered as high risk. Any business which is cash intensive business or a complicated, if a client is coming or if a business is coming with a complicated ownership structure, you must do a proper due diligence, rather an enhanced due diligence, to identify the reason for such complication and also to identify who are the ultimate beneficiary of such organization. If a client or if a company is a resident of a high risk country or countries, if they are coming for a sanctioned countries or countries which are undergoing embargoes, you must do appropriate due diligence, that means enhanced due diligence, especially for those countries or those jurisdictions who are considered as a high risk jurisdictions or financial secrecy jurisdictions. When it comes to onboarding a customer who are coming non-face-to-face, or if you are onboarding a customer remotely, you must do enhanced due diligence, because face-to-face customers or face-to-face transactions is very easy to identify. But if a customer is onboarded remotely, there is additional risk associated with it, because many individuals or many persons who are coming from sanctioned countries can avail this facility and can manipulate this facility. And also, if you see that a customer is getting a payment from an unassociated third party, you must do an enhanced due diligence. As we have said before, that onboarding customer remotely is very high risk, because you don't know who the person on the other side of the business. Now the question is how I can identify the customer and how I can see that whether that person is imposing a great risk for us. Before you open the digital onboarding process or remote onboarding process, you must check the risk associated with such kind of onboarding, because any sanctioned individuals, any sanctioned entities, drug traffickers can exploit this kind of onboarding process. Always keep it in mind that money launderers will always look for avenues where they can have least money laundering resistance. So before implementing or before rolling out digital onboarding or remote onboarding, you must do a risk assessment. So digital onboarding has some processes. The first, if a person or if a company is planning to onboard, they must scan their identity. Always keep it in mind that the person whom you are onboarding remotely, he must scan his identity, not uploading his stored ID card, so that you can check the ID card is a false ID card or no. You must have an optical character recognition device to extract information from the ID card. You must detect the liveness of the person. That you can ask them to take a selfie or to move in a particular direction to see that the person is alive and he is a live or alive individual, not a dead person's photo is uploaded during the onboarding process. When you collect all the information, you must conduct a proper verification through e-government services. And of course, you must implement certain security features before you implement or before you roll out digital onboarding or remote onboarding. Now we will come to a most important segment of this session, which relates to us who are practicing chartered accountants or practicing cost accountants, and it is related to all persons like us who are considered as professional gatekeepers or designated non-financial business and professions. Now the question will come that you might ask, see, I am doing audit for an organization. I am doing just giving an accounting service or bookkeeping service, or I am doing payroll processing for my client. Whether my services will be considered as a risky service or not, whether they are vulnerable to money laundering or vulnerable to proliferation of weapons of mass destruction. So another question will come, what kind of services are vulnerable to money laundering? Not every kind of services are considered as a high risk. There are certain services, and if you are giving this kind of services, you must have a robust anti-money laundering program. The first one is client account. If you are managing client account, like opening account on behalf of a client or managing the transactions on behalf of a client, before giving this service or before offering this service, you must do a risk assessment. And if a client is asking for such kind of services, you must identify the client, you must identify the reason for taking this kind of services, and last but not the least, check the ultimate beneficiary of these services. If you are advising on purchase and sale of real estate property, you must check who are the owners and who are ultimate beneficiaries, because real estate industry is considered as high risk industry, because money launderers target real estate because this kind of investment is a very safe investment for them. Another services which are vulnerable to money laundering are creation of companies and trust. Especially money launderers target professionals like us to create shell or shelf companies. So before creation of a company, you must identify the purpose of the company, who are the ultimate owners, what are the legitimate businesses of the company. Nominee services is also a risky services because many money launderers, they use professionals like us to do their dirty deeds. They don't like to come in the front. They use us as a nominee service providers, like they use us as a directors or as a shareholders, but they walk behind us to do their dirty deeds. So if any client is asking for a nominee service, you must ask the reason for it, the purpose or source of their activities, source of their fund, and the ultimate beneficiaries. And also, if you are managing certain client affairs like conducting transaction or on their behalf or buying or selling foreign exchange on their behalf, you must identify the customer, because this kind of services are considered as high risk services. So any of my friends, if you are giving any of these listed services, please implement a robust anti-money laundering program. Other than the services, as I mentioned, if you are working as a company service provider, like you are assisting your client to form a company, you must establish a robust anti-money laundering program or a sound anti-money laundering policies and procedures, because there are certain services also other than that, which I had mentioned before, are also prone to money laundering. For example, formation of a legal person or entity. If you act as a director on behalf of your client, like a nominee services, then you must identify the purpose of these services and who are the ultimate owner of such kind of company. If you are giving registered office services or providing business address for your clients, you must do an enhanced due diligence. If you are acting as a trustee of an express trust, you must do an enhanced due diligence and identify the ultimate beneficiaries of the trust, because many trusts are created in order to avoid freezing of assets. Also, if you are offering a services of a nominee director or nominee shareholders, conduct an enhanced due diligence. Other vehicles also money launderers and use, and they take us as an intermediary to use these vehicles in order to launder their dirty funds. What are these vehicles? These vehicles can be use of shell companies. Shell companies means the companies which doesn't have any operation, any assets or any activities. They are created to hide the beneficial owners. Not all shell companies are bad companies. Mostly shell companies are created, many shell companies are created for legitimate purpose, for holding assets, but money launderers abuse this kind of setup to conduct their dirty business. Any complex ownership structure is always prone to money laundering, because when it comes to a complex ownership structure, it is very difficult to identify who is the ultimate controller of the organization. If money launderers, they love bearer shares or bearer share warrants, because the name they can disguise it behind the instrument. If they use your services other than what is mentioned, then definitely you have to ask a question. I have already mentioned, if you are giving a nominee services like nominee directors, nominee managers, or nominee shareholders, please check the reason behind such kind of services and who are the person behind the organization. Also, trust and legal arrangements, check who are the trustees, who are the ultimate beneficiaries. Also, if you act as an intermediary, like assisting the client to open a bank account or conduct a transaction on their behalf, please check the reason behind such kind of services they are asking for. We have already discussed customer due diligence and why it is so important, and why enhanced due diligence is required for certain kind of business or for certain kind of individuals. Now, once we establish a customer due diligence program, it must be monitored or reviewed at least annually. At least you must review your customer due diligence programs once a year. And other than that, if you see certain change in customers' behavior, their activities, you must do additional review to see whether the risk pattern of the customer has changed or not. Suppose if there is a change in the level or profile of the client activities. For example, if the low risk student account all of a sudden started getting a lot of international money transfer, then definitely you have to look into that client or that account's activities. If your client all of a sudden change their country or operation, or they move to a high risk jurisdiction, then you must identify and verify the reason behind it. If you see the client has all of a sudden has acquired a new or a very significant source of income, you must do an analysis of it. And also, if you see your client or your customer is involved in a significant amount of cash transaction, you must verify that what is the reason behind the change of such kind of activity. If you see that your client's activities keep on deteriorating, or the records or internal control process are very weak, you must check it whether the client is using such kind of organization as a shell company. Maybe they are not doing any real business. If your client is keep on flaunting this or not complying with regulatory requirement, you must check what is the reason behind. Also, if you see that a newly established business all of a sudden inject a huge amount of capital, which is normally not a normal business scenario for that kind of client, please verify the source of fund. If you see the change is client strategy or business profile, all of a sudden, if your client started transacting in a gold or a high value product, you must verify the reason behind. And also if you see any pattern or change in the transaction profile of your customer, look at those evidence, and if needed, do a detailed investigation, and if required, raise a STR to your financial intelligence unit. As we said before, that when we do a customer due diligence and once we onboard a customer, we must give them a risk rating. Now the question is that what element should go into the risk rating system? As per FATF and as per other international bodies, the customer risk rating elements can be divided into 4 categories. First is customer risk, what kind of customers they are, what kind of products and services they're asking from you, from which country or from which jurisdictions they are coming from, and what kind of delivery channels your customer is using. Delivery channel means whether they are doing face-to-face transaction or whether they are doing transaction remotely. So these 4 elements are considered as a element for doing customer risk rating. Now we will do a small analysis of what goes into the customer's due diligence, especially customers risk rating. The first is the type of customer whom you are onboarding. Normally certain kind of businesses are considered as a high risk business, or certain kind of customers are considered as high risk customers in terms of their profile, in terms of their profession, or also in terms of their line of business. Like all financial institutions are considered as high risk. Then any business which are involved in international trade or international transactions are considered as high risk. If your business or if your clients are designated non-financial business and professions like us, like chartered accountant firms, consultancy firm, we are always considered as high risk business. Any business which is cash intensive business is considered as high risk because they are a favorite avenue for money launderers. So after we decide who are our customers and their line of business, the next stage is to look at from where our customers, where they reside at, where they are coming from. In case of legal businesses, what are their residency flag, and this is called jurisdictional risk analysis. When it comes to jurisdictional or geographic risk assessment, we have to check from where these customers are coming. That means what are their nationality, what are their country of residence, and where the customer does most of its business, and what are their geographical footprint in terms of business. If a customer is coming from a high risk country or financial secrecy haven or countries which are known for terrorist activities or drug trafficking or human trafficking, they are all considered as high risk customers in terms of jurisdiction or geographical risk. So when we do a jurisdiction risk, we look at the nationality of the customer, their residency, and their work profile or their activity profile in terms of their geographic footprints, mean in which countries they are doing business. If the customer is located in a low risk countries, but most of their business activities are in high risk jurisdictions, then this customer will never be considered as a low risk customer, rather a high risk customer. In order to check the jurisdiction risk, what are the things we should look at? Because every jurisdiction, especially the high risk jurisdiction, they have different kind of risk. When we analyze a customer, his country of citizenship or country of residence, we must identify whether the country has money laundering or terrorist financing risk, whether the country is impacted by terrorism like Syria, like Iran, like other countries which are already suffering, like Iraq, who are suffering from terrorism, whether the country comes under international sanctions or embargoes. We have to look at whether the country is known for high level of corruption and whether the country is well known as a financial secrecy haven. So when we conduct jurisdiction risk, we should take these factors into consideration. One is AMLTF risk, terrorism impact risk, international sanctions risk, corruption risk, and financial secrecy risk. Now you might ask that where I will get jurisdiction risk information. Now there are several providers of jurisdiction risk information. The best way to start with Transparency International Corruption Perception Index. This is a non-governmental organization. Every year they publish a corruption index for countries with highest corrupted countries to the lowest corrupted countries. So you can refer this country, a particular country, and their score to assess whether the customer who are coming from these countries are corrupted individuals or not. You can also refer to Financial Secrecy Index website. They also publish the list of jurisdiction where they practice high level of financial secrecy. And if your customer is coming from any such jurisdiction, you must do an enhanced jurisdiction risk assessment. Other than the two lists I have mentioned before, there are two very important lists you must consider when you conduct a jurisdiction risk assessment. One is FATF's list. Every year, FATF published a list for jurisdiction which are considered as a high-risk jurisdiction. FATF published two kinds of lists. One is blacklist, that means high-risk jurisdiction for which they ask all the other nations to take additional precaution or additional measures. FATF also published a list which is called as a grey list, that is jurisdiction which are under increased monitoring. That means jurisdiction which has severe anti-money laundering and counter-terrorist financing programs or policy and which are under monitoring of the FATF. So for this two kind of jurisdiction, especially the countries which are coming under this two list, you must do an enhanced due diligence. Now, three countries which are under complete FATF's blacklist are North Korea, Iran, and Myanmar, and the FATF asks to take additional precaution before dealing with these three countries. Mostly other countries are prohibited to deal with, especially North Korea and with Myanmar, because they are under complete embargo. So if your client is coming from any of these three countries, you must do an additional due diligence to check whether you will accept this customer or not. Please refer to your country's regulations and also your organization's client acceptance and sanction policy. So far, we have discussed the customer risk, the kind of customer who are considered as high risk, the jurisdiction risk, the second element of risk assessment. Now we will talk about a risk which is called product, services, and delivery channel risk. So what kind of products which we are offering to our customers are considered as high risk? They are online banking, cash collateral facilities, international wire transfers, because money launderers and terrorist financiers use this avenue to transfer their money. Another area which is called remote deposit capture, that means you can take the photo of a check and send it to the bank so that the check will be credited in your account, because lot of frauds are associated with remote deposit capture. And also, if a client is not acting by himself, whether if he is using power of attorney, that kind of services are also considered as high risk products or services. Now we will do. Now you can see that customers based on all the risk elements are considered high risk, medium and low risk. You can make also some sub classifications, but normally when we do customer risk rating, we do three main kind of classification. This is how it is classified. Now we will do a quick analysis, because the question will come to your mind that how we will do this assessment. Normally, every banking organization or big financial companies, they have a risk rating program or risk rating application or tool through which they can do risk rating. But when it comes to DNFBPs, we don't have such sophisticated procedure. So you can use a technique like this, that create a form, create a dashboard, list down the kind of your customers, then do a risk rating, give a weighting percentage, and based on the rating criteria, create a risk that when it comes to customer type, what kind of rating they will get. Same thing is applicable when you are doing geographical factor or jurisdiction risk rating. Check whether your customer is a national or whether he is a foreigner. What is the country of residence for your customer? If your customer is a foreign customer, definitely he will have a higher risk. And if your customer is residing in a high risk jurisdiction, maybe he will get a higher score for jurisdictional risk. Third factor, the product and services. What kind of product and services your client or your customer is availing, and based on that also you can score your customer. Like for bankers, safe deposit boxes are always considered as high risk. Online banking is always considered as a high risk service. International wire transfer, of course, it is of high risk services. Prepaid cards are normally we don't consider as a high risk. And also with an account compared to the profile of the customer, if the account has a very high balances, that kind of account also is considered as a high risk account. So based on the risk of individual elements, we make a composite risk score, and this composite risk score will give you an analysis of in which bracket your customer will fall, whether in a high risk bracket or a medium risk bracket or a low risk bracket. If the customer is in the high risk bracket, you have to do an enhanced monitoring for such kind of customer and their accounts. Okay, so far we have discussed the customer due diligence process, risk rating of the customers, and what are the elements which goes into the risk rating. Now we will talk about another important aspect of customer due diligence, which is sanction screening. As I discussed that when you are onboarding a customer, you must do a sanction screening to check whether the customer is a sanctioned individual or whether the company is a sanctioned company or not. Now the question is that why we will do sanction screening. Normally UN Security Council, they apply this sanction screening process in order to support peaceful transition when it comes to a particular country or regime, to deter non-constitutional changes, to protect human rights in a particular country, and also to deter proliferation finance, especially for manufacturing of weapons of mass destruction, and also to combat terrorism. There are different kinds of sanctions. These sanctions are comprehensive sanctions. This kind of sanctions are imposed against a particular jurisdiction or a particular regime. When a country is suffered from comprehensive sanctions, all other countries and nations are prohibited to conduct business with them other than some human aids. The second kind of sanctions which are imposed by United Nations are sectoral sanctions. This kind of sanctions target a particular sector of a country, but the sanction is not imposed for the entire country. The third category of sanctions is called targeted sanctions. This kind of sanctions are imposed against a particular individual or a particular group or a particular entities. The tools used for targeted sanctions are travel bans for the individuals, freezing of their assets, and also prohibiting selling of any military equipment to those individuals or to those organizations. Now, when you are doing sanctions, always keep it in mind that sanction screening is not just for the individuals. You have to do sanction screening for the company. Take the name of the company and put it into your sanction screening software and to check whether the entity is a sanctioned entity or not. Also, you must do a sanction screening for the trade name of the company. Separately from the name of the company to check whether the trade name is sanctioned or not. Other than individual or a company, when we onboard our customers, especially if they are in a shipping business, you must do sanction screening of the vessels, whether the vessels are sanctioned vessels or whether these vessels are coming from a sanctioned jurisdiction. Before doing sanction screening of the vessel, please check the residency flag of the vessel. If you find the vessel keep on changing their residency flag, this gives a clear indication that the vessel belongs to a sanctioned individual or the vessel belongs to a country which is a sanctioned country. Now, when we do the sanction screening, there are some mistakes we made. When you are, especially when you are in a country where English is not the primary language, and when you do sanction screening, don't do literal translation of the name of the company. I have given an example here, 3 examples here. One is in the Chinese language. I hope you can see in the screen. The company's name is in a Chinese language. It is given something in a Chinese font. If you do a literal translation, it shows that Sanshi Joy is something like that. But the correct way of translating the company before you put it into the sanction screening system is to do a proper translation of the name. So if you see the Chinese name of the company, but if you translate into it and put it into the sanction screening system, it is coming to Sanshin Trading. So don't do literal translation to a full translation except for the trade name of the company. Also, I have given an example of how to do a sanction screening for a company which comes with an Arabic name. The same rule apply. Don't do literal translation, do a proper translation except for the brand name of the company. Also, if a company's name is in the Hindi language, follow the same procedure. Now, after you do a sanction screening, you might get a flag or a violation report. Now, what to do with this violation report? Suppose if you do a screening of an individual and if you see that there is a flag against that person's name, you must investigate a detail or collect more information about the person before onboarding that client. Or the same rule is applicable when you are doing sanction screening for a legal entity. I have given some example here. I don't know whether you can see in your screen that violation report can be three types. One is false match, another is a possible match, third one is positive match. False match means the name of the person whom you have put into the sanction screening, his name is not matching with the sanctions individuals list. When there is a false match, you can easily accept the customer or onboard the customer. But when it comes to a possible match, you have to take additional measures or additional identifiers to again run the sanction screening. For example, if you put a person's name and if you see that maybe another 30 names pop up as a sanctioned individuals, you add some additional information. For example, the date of birth, country of birth, and year of birth of that individual to check what the final result is coming out. If the final result is a false, then you can easily accept the client. When it comes to a positive match, that means the person is a sanctioned individual or the legal person is a sanctioned entity. If the match is positive, never accept the customer or the client because they can be a money launderer or they can be a drug traffickers. So sanction screening is also a part of customer due diligence process, and before accepting a customer, you must conduct a sanction screening to check whether the entity or whether the individuals are sanctioned individuals or whether they are sanctioned entities. So that's all for today. And maybe if we have time, we can do some question answer session. Yes, please. Did we lost the connection? Yes, that's all for today. So if you have any question, maybe we can quickly discuss.
We have a couple of questions. Okay, I will read down, madam.
Yes, please.
I guess this aspect which you have already covered, but yet again I am providing that question. It's a question asked by Sri M. Gopalakrishnan sir. Please explain what are the anti-money laundering requirements for a practicing cost accountant.
Okay, fantastic. For practicing cost accountants, now we know that they are coming under the anti-money laundering regulations. For a practicing cost accountant, first you must establish a customer due diligence program, means you must have a KYC before you onboard a customer. If you don't have a sanction screening system and if your pocket permit by a sanction screening system, there are different providers are in the market. You don't need to buy wall check or you don't need to buy Dow Jones. You can go for lower version or lower budget sanction screening system, because without that it is very difficult to identify sanctioned individuals. Once you onboard a customer, please give a risk rating for them to monitor, especially the high risk customer or high risk client, and also do a proper record keeping and also create a procedure for investigation and also to issue a STR to the FIU. So these are the minimum requirements for a practicing cost accountant. And also refer to your policy, create a AML CFT policy for your organization. This will give you an overall guidance.
Thank you, ma'am. We have another question asked by Dr. Lakshmi V. Okay. Individual acting as a formation agent will be regarded as persons carrying on designated business or profession under
Yes.
PMLA, according to the new amendment. I have a doubt whether the consultants who assist with the company incorporation without formal authority or certification would be subject to the obligations under PMLA.
See, here the issue is that if you are directly involved in advising or assisting client in company formation, then definitely your services will be considered as a high risk service and you will be considered as DNFBP. Please look at you, as I said, that like for UAE, they are considered as DNFBP. In Qatar, they are considered as DNFBP. But if your regulations say that if you are giving advising services in company formation, and if it comes under DNFBP, you have to have a robust anti-money laundering policies and procedures.
Okay, thank you, ma'am. This is the questions which the participants has asked us. Okay, with this, thank you everyone, because I personally thank Sangeeta ma'am for such an elaborative discussion or thought-provoking discussion on this particular topic. I am hopeful that our members will be much benefited in this unique subject with the authority person. A person like Sangeeta ma'am has shared her valuable insights with a very illustrative way she had done. And thank you, ma'am. Thank you on behalf of our Trivandrum chapter and Pondicherry chapter, also Southern India Regional Council, and we look forward to having more professional development programs with you, ma'am, subjected to your availability and your area of interest. Thank you. Thank you, ma'am. With this, we are formally concluding this webinar, and we assure all our participants and members that Trivandrum chapter will be coming with with some other much relevant program in very shortly. Thank you. Thank you all.
Thank you very much, and have a nice evening, all of you. Thank you.